Hi, this is Michael Rosenbaum with NGG Mortgage's latest video blog. Throughout my career, I've been diligent in watching over my borrowers and dropping interest rates to take advantage of what we call a no-cost refinance. Today, I'm going to go through the basics of how to lower your mortgage interest rate and your payment without an increase to the loan amount and all transactional closing costs paid by the lender. I believe any improvement to interest rate on your mortgage without increasing the loan amount and without paying any transactional closing costs, it's a no-brainer. A borrower can take advantage of the savings by putting more into other investments or just having additional funds for family expenses. Otherwise, the savings can be applied towards the loan as a principal contribution, which ultimately results in accelerating the payoff of the mortgage itself. There is no minimum amount of interest rate savings necessary to justify a refinance. I've heard borrowers tell me, my dad told me that it isn't worthwhile to refinance unless I improve by at least 0.5% in interest rate. I've had others tell me, it doesn't make sense to refinance unless I save at least $200 a month. Honestly, these are arbitrary benchmarks. My opinion, it makes sense to refinance even for the most marginal improvement in interest rate. As long as the transaction has the closing costs covered and there's no increase to the loan amount itself. At NGG Mortgage, we structure a no-cost refinance where there is a lender credit to cover the transactional closing costs, items like lender fees, appraisal, notary, government fees, etc., ultimately leaving the borrower to pay only regular carrying costs. Those items include prepaid interest, taxes, and insurance are the same to set up an escrow account. These are the same costs that would be paid ongoing regardless of any refinance. A borrower without a prepayment penalty does not need to wait any period of time after closing their current loan to take advantage of lower rates and go ahead and complete a refinance. On most loans, there is no waiting period after completing the prior mortgage before being eligible to take advantage of a refinance. I hear all the time from borrowers that they've heard they need to wait 6 months before doing a refinance. Unless you have a prepayment penalty, which frankly at this point are pretty uncommon, a refinance can be completed immediately following the completion of your current mortgage. In short, when rates drop, that's the time to take advantage. Lowering your rate and payment with no increase to the loan amount is frankly a no-brainer. We're always tracking rates and our borrowers here at NGG Mortgage to ensure that we take advantage of the market when rates drop. Let us have an opportunity to look at your current mortgage and see what we can do to save you money. I'm Michael Rosenbaum with NGG Mortgage, and thanks for enjoying our latest video blog.